Hello everyone. Welcome to my channel. If this is your first time here, my name is Unwana Udoh. Every week I share content to help you master your personal finance and grow your wealth. So thank you very much for being here, and I hope you find value in my channel. And if you do, please make sure you hit the subscribe button and also hit the notification bell so you will get notified of my newest videos. So thank you so much for all my subscribers. We recently just crossed the 7,000 subscriber mark, so I want to thank you all for supporting the channel and also helping grow this channel, and I really thank you all. So today's topic has to do with buying your first home. So should you buy your first home now or wait? Now, it's not a yes or no answer. However, it depends on your situation. So I'm speaking specifically about the United States because this is where I am right now, but certain things might apply to other people. So if you're watching from other countries out there, because I know I have subscribers from all over the world, but this topic is specifically for people based in the United States. However, you might be able to learn from certain things that I'm going to share today. So this is basically what the process looks like when you're buying a house. So there are certain factors that you need to consider before you buy a house. So number one has to do with your credit. So you want to make sure that your credit puts you in a position where you qualify for a loan. Number two has to do with your income. Okay, you must have an income that can support your mortgage. So banks look at your income as well. All right. Number three has to do with your down payment. Do you have the required or the down payment to put down on your new home purchase? Okay. And then number four, do you have a savings? Do you have an emergency fund of at least 3 months expenses saved up in your bank? So these are some of the things that you need to consider before you buy a house. Now, if you're currently renting, all you have to do is you just pay your rent payment and that's it. You don't have to worry about fixing things. If you have damage to your toilet or a clogged toilet or any major repairs, all you do is just contact the landlord or whoever runs the apartment complex where you live in. You report the service request and they send someone to come fix it for you, and that's all. So every month you're just paying your rent. So for instance, let's assume that you're paying for instance, the average rent in this area where I am. So let's assume that you're paying maybe $1,200 a month for your rent. So every month you pay your rent, you pay $1,200, and that's all you have to pay, in addition to your light bill, your phone bill, and all that stuff. So when it comes to just your apartment, all you're responsible for is just your rent of $1,200. However, if you have a home, let's assume that you decided to go ahead and buy a house. So let's say you had the down payment, you had the good credit, you had the income, you have your 3 months expenses saved up in an emergency fund. So let's assume that you're paying $1,200 a month for your mortgage. Now we're assuming that that includes your principal and interest payment. Don't forget, even if it includes your insurance and your real estate taxes. So let's assume best case scenario, you're paying $1,200 and that includes your principal, interest, insurance, and taxes. Okay, and it comes to $1,200 a month. However, when you own a home, there are other expenses that come with owning a home. For instance, you have to pay for repairs. So in the same scenario, let's assume that you had an issue with your toilet or a broken window or whatever, or your driveway needs to be fixed or your roof needs to be replaced. Those are expenses that comes with owning a home. Okay, so because you're paying $1,200 a month for your mortgage doesn't mean that's all the expenses that you would be hit with. Okay, so you do have other expenses that you have to handle. Like I said, if you have any major repairs, if you have any fix-ups, or if you have any things, like trying to replace your roof or replace your driveway, you have to make sure that you budget for those things. All right. So just having a home doesn't mean that all you pay is $1,200 a month. There are other expenses that go with owning a home. Now, what's happening right now in the US market is the economy is beginning to pick up after the pandemic, and a lot of people are buying homes now, okay, because interest rates are so low, because the government is trying to spur spending and getting people to spend money. So interest rates are very, very low now, so a lot of people are going into buying homes right now. And the unfortunate piece is a lot of people are paying too much for homes right now. So this is what we saw back in the crisis of 2007, okay, when we had the financial meltdown. People were paying too much for homes, and I can see the same trend happening right now. A lot of people are buying homes that, yes, you can afford the payments, but can you really afford the house? So what's happening is, let's assume it's $100,000 house under normal circumstances. Now people are paying, $150,000, $160,000, or sometimes, I'm just using that as an example. So people are actually paying, 2-3 times what the house is worth, because everybody wants to get into the housing game, because interest rates are low. Agreed, interest rates are low, so people think, you can afford a bigger house. However, you put yourself in a position where if you did not put down the 20%, so ideally you should have put down 20% when you bought your property. Unfortunately, not too many people can afford to put down 20% on a home purchase. And as a result, the government has a lot of programs where they help first-time home buyers. So in some cases, you might put down as little as 3%. So which puts you at a disadvantage, because you really don't have enough equity in the property. Now, we just went through the health crisis, and we still have a lot of families, a lot of homes that are behind on their mortgage payments. So what's going to eventually happen is, most people are probably going to end up having their homes foreclosed on them, because if you can't meet up with your payments, the bank comes for the house. And unfortunately, we're seeing the trend now where people are bidding and people are competing to buy homes, and they're paying a premium price for these homes. So basically, it is a seller's market right now. So if you have a property and you put it on the market, chances are you'll make a bundle from people fighting just to buy your property, okay, because of interest rate is low right now and everybody wants to be a homeowner. So what I'm afraid of is, in a couple years, because real estate is cyclical, okay, real estate is very slow, okay, so all the issues that we have now will not manifest until maybe a year or 2 years from now, when all those property owners who are behind on their mortgage can't meet up with the payments, and then we go into a foreclosure environment. When you have foreclosures, it pretty much depresses the housing prices. So if you are buying a house in 2021 and you overpaid for the house, so what happens in a couple years is that your house that you paid, let's say you paid $300,000 for, will now be worth $200,000, because houses around your neighborhood went into foreclosure, and that depresses the house value. So I am not a real estate broker, I am not a financial advisor, I'm just a regular guy on YouTube sharing content with you, just letting you know that sometimes it might not be the right time for you to buy a house. Just because your cousin, your brother, your neighbor or friends are buying homes doesn't mean you have to jump on that bandwagon and buy a house. So the ideal situation for you is to maybe rent for a few years while you save up your down payment, if you still have that itch to buy your own home. So at least you have the 20% to put down on the home. Like I said, it's going to take discipline, it's going to take sacrifice. You'll have to increase your income. You can't save your way to saving 20%, by stopping to drink your coffee or cutting back on eating out or etc. Yes, it's great to do all that stuff, it's great to budget, but it's going to take you a while for you to save up that 20%, unless you have a high income. All right, so for most people, you don't have high income. The only thing you can do is to create other sources of income, like a part-time job, or start a business, start an online business, start an e-commerce store, do something that brings in income, so at least you have that extra income coming in where you can put towards your down payment for your new house. All right, so if you found value in this, like I said, it's not a quick decision that you have to make. Buying a home is a huge commitment. Okay, having a mortgage is a huge commitment, and the sad part is most people don't understand how mortgages work. Okay, if you need more content around mortgages, around buying a house or whatever, leave me a comment below and I'll do my best to go in depth into the process of buying a house. And like I said, I am not a mortgage broker. I have been through the process of buying homes. I have been a real estate investor. I've owned multi-unit properties. I've also owned single family homes. All right, so I'm just sharing things from experience, trying to protect you from falling into the same trap that most people are falling into right now. So my humble opinion would be, if you don't have 20% to put down on the property, if you don't have your emergency fund set up, okay, if you have issues with your credit, all right, now shouldn't be the best time for you to buy a house. Okay, regardless of whether you're approved or not, you shouldn't buy a house yet. You should wait. All right, if you're still itching to buy a house, my recommendation would be to buy an investment property where you can live in one unit and rent the other units out to tenants, and those tenants help you pay your mortgage. All right, so that's the strategy I'm looking to implement next year. So that would be 2022, where I buy my next investment property, and that's going to be my strategy. Buying an investment property and living in one of the units and then renting the other units out to tenants, so I can have my tenants help pay my mortgage. So that's the right way to do things. And then eventually, once I scale up and repeat that multiple times, then I can now have enough cash flow coming in where I can now buy a single family house if I so choose and not have to stress about paying my mortgage. Okay, if you found value with my content, make sure you hit the subscribe button and also smash that thumbs up button so YouTube algorithm, okay, will share this video with other people, because that's how it works. So the more likes I get on this video, the more comments I get, YouTube will share this with other people. Okay, my goal is to help you, is to help people master their personal finance and grow their wealth. Now, if you need more help, I just created a basic course. It's nothing special, but it's just a basic course that based on things that I have implemented to get myself out of the financial rut I got myself into. So I'll leave the link below. The course is called Personal Finance Domination, and right now I'm still having my promotion where you get 30 days money back guaranteed. If you sign up for the course and you didn't find value in it, just send me an email and I will refund your money. Okay, so I'm just here trying to help people become financially savvy, because unfortunately our school systems and our homes and our parents don't teach us how to handle money. And I have learned from experience, okay, how hard it can be if you lack financial education, financial literacy. So thank you very much for being here, and I'm on my way to the gym now. I just wanted to shoot this video real quick to let you know whether it's a good time for you to buy a house now or wait. Okay, there's going to be lots of changes coming to my channel, and because we're growing, our goal is to get to 10,000 subscribers by next month, April, and with your help I know we can get there. So thank you so much for being here. Look out for all these videos that I will have coming your way, and make sure you take good care of yourself, and I'll see you on my next video. Take care. Bye bye.